I'm Derrick Weyrauch. I'm the president and CEO of Palladium One Mining. And here at PDAC downtown Toronto at the convention center, which is absolutely packed. It's an excellent show this year. Much appreciated after the last couple of slow years due to COVID.
Well, that's great. Hey, Derrick, I really appreciate you kind of dialing in hot off the shop floor, as it were. I want to talk to you about, obviously, today's press release. Everyone's talking about it. MetalCorp, Limited, right? I mean, talk through the kind of terms of the deal first, then I want to get into the why.
Yeah, sure. So it's a small tuck-in acquisition, $3.3 million purchase price. We're going to be paying 100% of it in shares. And it's really strategic. I think the first way to think about the transaction is it's financing via M&A. So out of the $3.3 million purchase price in shares, we're going to be picking up about $1.8 million in cash, non-flow-through money, so hard dollars for those that use that terminology, which is great. And there's obviously then a premium we're paying for about $1.5 million for a portfolio of assets. We're acquiring 2 critical mineral projects in Ontario, as well as a small royalty portfolio in Ontario, Canada, and most importantly, and what really has me most interested with regards to this transaction, is we're acquiring an earn-in agreement where Barrick is earning into the company's projects known as East Hemlo, which is the eastern extension of their Hemlo mine. And for those that haven't been following our story fully, our Tyko project is just north of Hemlo. So we are going to be one of the major landholders on that northeast section of Lake Superior.
Okay, so and what you're also doing, and in fact, you know what, before I kind of get into also what you're doing is, what we're hearing from the various conferences down in Miami, down in the US, and also from early conversations here at PDAC. I know it's busy because I can hear people in the background. There's a bit of hubbub going on there. Is that the gold guys are feeling a little bit unloved at the moment? The kind of critical minerals and the battery metals companies seem to be the talk of the town. I mean, sorry, is that what you're hearing as well?
Yeah, very much so. Yeah, recently I was in Vancouver, and last week I was in Miami for the conferences down there, and it's absolutely the case. There's an absolute buzz with regards to the critical minerals. And most of the focus from my perspective is on the nickel, copper. Obviously, lithium is quite hot right now. But you know what? There's even people walking around looking for the zinc exposure. So, it's definitely, I think, hurting the meeting schedules of some of the pure play gold companies.
And it's kind of interesting. I think what people are looking to, these very exceedingly large balance sheets of automotive companies or battery metal companies, not battery metal, sorry, battery companies, where they dwarf mining companies typically, so that there's new sorts of money coming into the space. But guys like you are starting to get focused on, and you've just added copper, nickel, zinc, silver, gold to the portfolio with this acquisition as well. I'm intrigued as to how are you picturing this year playing out for you? But getting all of those kind of key buzzwords into the story, into the narrative is great, but then you've got to actually do something with it. So what are you trying to build up here?
We are very much thematically on the green technology or green transportation thematic. We already have a tremendous amount of copper and nickel exposure. This acquisition is supplementing that exposure. Now, what's most important about this particular transaction is it's not going to distract us. We do not have any requirement to fund the gold on the Hemlo project. That's Barrick is going to be funding the assessment credits there. The other assets, a key asset, which is Big Lake, which is a VMS project, also proximal to Tyko, and the North Rock, which is a copper asset. They have assessment credits banked up that'll last between 10 and 20 years. So this is really providing a significant amount of optionality to the company at a time when these commodities are very hot, but our focus will remain our current portfolio.
Right. But I will say this, you're now starting to build up a portfolio, and with portfolios comes responsibility, liabilities, and cash calls, because you got to keep them motoring, or you got to have a view about how they come together or what you're going to do with them. So, a $25 million company with a growing portfolio of green metals is great, but you've got to kind of drive the value portion here. So how does one do that? Is the market going to do the heavy lifting, or what are the bits that you are in control of?
Well, we're really in control of the discovery success that we have, right? So we're going to keep a focus on Tyko. We've applied for permits on the Canalask project up in the Yukon that we're extremely positive on, and we're going to focus on those two projects in the near term. What this acquisition does is it provides us some interesting optionality. There's a lot of people out in the market that are looking for added copper exposure. North Rock has a historic resource. I think it's very clear that that property can grow. So whether we're doing the work or perhaps somebody else does the work, that's something we are going to look at as part of our corporate development strategy and how we get exposed and advance these projects while not being a distraction to our exploration activities.
Right. Okay. And so, historically, typically, exploration kind of drives the value, certainly of juniors, explorers, etc. Exactly. Last year was a kind of shock to the system for lots of people. Lots of news items coming out in press releases. Had no reaction, a shrug from the marketplace. I think precious metal guys especially. But for you, were there any learnings from last year about how you approach the market? Have you adapted your thinking for 2023 as a result of last year?
Well, I think the reality is that the market works at lightning speed, right? And you can't be you can't have so much optimism that the money's going to be there tomorrow. You've got to take advantage of opportunities when they present themselves. So apart from the asset portfolio we're getting with MetalCorp as an example, we're getting $1.8 million in cash on this. It's effectively a financing. We're only issuing, like if we went to the market and did a financing today, we're only issuing an extra 13 million shares for this entire portfolio. So, make sure that we have a robust balance sheet is, I think, really critical in being able to ride the wave, as it were. So on a pro forma basis, with this transaction as at December 31, we'd have $13 million in cash and position us extremely well to ride out whatever volatility we see. And at the same time, we continue to seek other opportunities in the market, but this was an opportunistic one that took some time to put together. So that's part and parcel of what we get informed when you have a market that one day to the next just rolls right over.
Nice having Barrick as part of the conversation too, I imagine. So given that kind of cash environment that you explained, or the balance sheet environment that you've just explained, are you under any pressure, do you feel, either internally with in board discussions, because you discuss these things all the time, I'm sure, or from shareholders or elsewhere to maybe offload? Because people are looking at Finland and going, well, it's kind of gone a bit quiet there. Is there some value to be had now or in the future? And if so, what does that look like?
Finland is a very high quality asset. It's large in scale. It's very straightforward, we believe, to grow it significantly from where it is now. And there's huge optionality in it. It's the only asset right now where we have a resource. And I believe it underpins our valuation because it's got that resource. Disposing that asset right now, I'm not sure is the right thing to do, or spinning it out or something along those lines. As a matter of fact, what surprised me quite a bit coming over the last month or so is the frequency of the inbounds related to the Finnish project has increased dramatically from corporates. Whereas for the last 9 months, I've been receiving calls and inbounds related to our Tyko project. So people are looking to get positioned with quality assets, and I'd rather have a quality asset in our portfolio than not.
I get that. And look, all I'm trying to do is get a sense of your thinking and the pressures that you're under, which affect that thinking, right? So you, like I say, you've kind of got all the right buzzwords in terms of, copper, nickel, cobalt, nickel, silver, gold. It's all happening. And you're in control of what you can control of, and that is like, how do you spend the money that you do have? Because I think timing is everything. You've got to time the market for some of these commodities, some of these metals, or you're going to just be spending money for the sake of spending money. So, for example, with doing a PEA, it's the beginning of a process which leads to some, accretive value. But at the same time, PEAs themselves haven't tended for the last 18 months or so to give the companies the bump that they need. So is the bump or the spend better put into the ground through the drill bit or through acquisitions? I mean, how are you viewing your ability to generate and create value for your shareholders in the share price? What are you focused on?
Yeah, so part of what informed our activities right now is what occurred last spring, or Q2, if you will. The market basically rolled, and we had a decision to make. We said, look, for example, if we take the next $10 million that we're going to invest, given the market context, what is the best way to spend that money and invest it in the project? And we made a very conscious decision not to go down the feasibility route with the Finnish asset at this point in time. We did do an internal scoping study. We have that, but it's not for public consumption. The reality is to take a project like that to BFS level, that's a lot of money, right? That's maybe another 15 odd plus or minus $1 million easily to get there. So we looked at the tea leaves and we said, we think based on the discovery success and what we've got in Ontario, let's focus there and build out the resource. The grades are absolutely spectacular. Maybe since I'm sitting here at the booth and there's nobody behind me, what I'm going to do is I'm going to just show you some of the core. So we've got stuff here running like 12% nickel. So you'll have to zoom in and read the labels afterwards when this isn't running live. But here you go. Here's some of our core.
Cool.
So
what are we looking at there?
We are looking at the core from Smoke Lake and from West Pickle. And, this piece here, for example, that's running 10.3% nickel, 0.8% copper, 0.15% cobalt. This is the good stuff. It's pretty spectacular. Yeah. Over here is my favorite piece by a long shot. So I might have to put this one in my pocket. But this is 12.9% nickel, 2.7% copper, 0.16% cobalt. Plus you've got the PGs on top of that. And this is what we're working with in Ontario at the Tyko project. And that's, our booth has been just crazy yesterday and earlier this morning. We seem to be at almost a lunchtime pause right now. It's pretty exciting stuff.
Well, those grades are insane.
Yeah.
Okay, we got to pick this up when you get out of PDAC, because I know you've got to press the flesh and walk the streets, as it were, and talking to people. But I'd love to kind of get into some of that drilling that you've done there, because obviously I was going to ask, have you got a preference as to how you allocate your capital? You said you're going to spend it wisely, and you'll make those decisions, as things proceed. But Tyko's the thing that people got excited about last year. We've done a couple of interviews where Tyko sounds like he's continuing to knock it out of the park.
It is, yeah. But we need to find more tons, right? We've got fantastic grade. We've got two zones that are 20 kilometers apart. We've still got some news to put into the market, but what we need to do is build the tonnage. And, some people have observed, you've done things a little bit backwards. Most people go out and find a lower grade deposit and then try and find high grade sweeteners to actually make it economic, where we're hitting the floor right away with this incredible material. And now we just need to build up with some more grade. And given the tens of kilometers of these interpreted conoliths that we have on the property, we think we're going to get there, but it's still early days. What people need to remember is this property hasn't even been mapped. So all the work is being done by ourselves for the first time. And we just got to do all the recipe, as it were.
Well, you've only got 30,000 hectares to explore, so you better get on with it. I'm gonna love you and leave you. Good luck with the rest of the conference. Come and see us afterwards, because I do want to kind of get that update on Tyko and quite frankly this new acquisition of yours. So thanks very much for making the time for us today.
Oh, thank you so much, Matt. Always a pleasure talking to you. Have a good day.